Hello again. Welcome back to the channel. Today we'll be discussing the most popular investment avenue in India, the fixed deposit. What is fixed deposit? A fixed deposit is a financial instrument provided by banks or NBFCs which provide investors a higher rate of interest than a regular savings account until the given maturity date. So, in simple words, if you have surplus money in your savings account and you won't be needing it for a while, let's say a few months or a couple of years, then a fixed deposit is the safest way to make your money work for you while you're asleep, which will generate money at a predefined rate of interest for the invested time period. Generally, longer the tenure, higher is the return. Now let's evaluate the pros and cons of a fixed deposit so that you can decide what's best for you. Capital protection. Fun fact, during the 2008 financial crisis, the debt market outperformed the equity market in terms of returns. FD makes money but doesn't really create wealth. This is because the interest you earn is taxable and also the returns are competed against the rising inflation. Thus, negligible amount of wealth is created but capital is protected. Fixed deposit is the safest option and has guaranteed returns. This is because while booking your fixed deposit, you know the maturity amount and also there is no market related risk as such. Choice of interest payment option. You can choose non-cumulative payment, that is monthly, quarterly, annually interest payout, or cumulative returns where the interest you earn will compound itself, generating more yield returns. Senior citizens have a slightly higher rate of interest. Now moving to the cons. Opportunity cost. Parking your funds in a fixed deposit blocks your opportunity to invest in other investment avenues which may harvest greater returns. Low ROI means low risk attracts low returns. There's a risk of bankruptcy. As per the Union Budget 2020, insurance of up to 5 lakh rupees is offered to all commercial bank depositors in case that bank defaults. In case any emergency or personal reason you need to prematurely withdraw the fixed deposit, then an exit load will be charged. The general thumb rules I follow while booking a fixed deposit. Portfolio exposure. I keep in mind to limit my fixed deposit exposure according to my portfolio requirement. You can check the entire details in the portfolio episode. Link is attached in the description. Liquidity means the ease of withdrawing the FD with minimum hassle in case you need the money urgently. Banks liquidate immediately, but NBFCs may take a few days. The biggest mistake I know people around me generally make is that they book fixed deposits in their banks where they have their savings account and they miss out on the opportunity to book a FD in a well reputed NBFC. NBFC is non-banking financial company. NBFCs more often than not give higher rate of interest than any private or government bank. Credit rating for banks and NBFCs work just the way you see ratings of any hotel or restaurant online before you visit the place. So keep in mind that A, AA, AAA, A plus ratings are very safe to invest in. If you book a FD in a well-reputed bank, you need not worry about its rating. So that's it for today. Hope you enjoyed the video. Let me know if you have any other queries on fixed deposit or feedback to the channel. I'd like to conclude this video by quoting Robert Allen. How many millionaires do you know who have become wealthy by investing in savings account? Basically, you need to make your money work for you and not let it sit idle in your savings account. Please like, share, comment and subscribe to the channel. Until next time, Stay invested.